Hey there, and welcome to your deep dive. We're tackling venture capital today,
Ooh, exciting.
specifically how they decide which early stage startups are getting those big investments.
Yeah,
Think about it. You're prepping for a pitch, or maybe just daydreaming about becoming a VC yourself.
right.
Well, today you'll learn how they separate the amazing thing from the just okay.
Yeah, it's a real process.
It is. We've got research papers, handbooks for investors.
Bruh.
We even have a questionnaire that's used in due diligence.
Oh, wow.
So yeah, get ready. We're going deep.
It's a fascinating world, very mysterious from the outside.
It really is. So let's start with the basics.
Okay.
What's a VC really looking for in a potential investment? Is it all about a brilliant idea or...
Oh, it's definitely more,
Yeah.
more than just an idea.
Okay.
You need a solid business model, a market that's ready for what you're offering,
That makes sense.
and the potential for some serious growth.
Okay, so how do they even find these startups? Do they just wait for the pitches to roll in or...
Not quite. It's more like a two-way street.
Huh.
So while startups are perfecting their pitch, VCs are out there searching
They're on the hunt?
for that next big thing.
I like it.
Yeah, and a lot of it boils down to their network.
Ah, so connections are key.
Referrals from trusted sources, industry events,
Mm-hmm.
even just keeping an eye on what's making noise in the tech world.
Makes sense. So having a strong network, that must give you a huge advantage in this game.
It really does.
But for those of us who aren't, hanging out with tech giants, what then?
Right.
How does a startup even get noticed?
Well, you're right. Those referrals, they can be a game changer.
Yeah.
Studies show over half of VC deals come from their existing network.
Wow.
But that doesn't mean you need a direct line to Silicon Valley
Okay.
to get noticed.
Yeah.
Plenty of other ways. Pitching events, demo days, even online platforms.
It's about getting your foot in the door.
It is. Think of it like that.
So it's a mix of putting yourself out there and strategic networking.
Yeah,
I like it.
I like it.
Now, assuming a startup catches a VC's eye, what happens next?
That's when things get really interesting. That's due diligence.
The deep dive.
The deep dive.
Separating the contenders
It's,
from the pretenders.
Yes.
I bet this is where those investor handbooks
Yeah,
and those questionnaires come in.
absolutely.
What are they really looking for in this phase?
Due diligence is rigorous. They're not just glancing at your pitch deck.
Okay.
They're looking at every single aspect of your startup.
Wow.
It all starts with the team.
Okay, the people.
VCs want to see passion, experience, a committed group of founders.
Uh-huh.
Think about it. They're investing in the people as much as the idea.
Oh, that's a good point.
And then there's the business model. How does your product work?
Makes sense.
Who are you targeting and how will you make money?
The big questions.
Yeah, and of course they're going to look closely at your financials.
Yeah,
Revenue projections, cash flow, the whole 9 yards.
that's pretty intense.
It is.
Is there anything startups can do to really stand out during due diligence?
I would say honesty and transparency are key.
Okay.
VCs want to see that you understand your strengths and weaknesses,
Right.
your position in the market, any potential risks.
Be realistic.
Exactly.
Okay.
And they're also looking for that extra something,
Like what?
a unique approach, a captivating story, or a team with just contagious energy.
Right.
You have to remember, VCs are bombarded with pitches constantly.
Yeah, they're busy.
So you have to give them a reason to believe in you
And your vision.
and your vision. Yeah.
So it's not just about checking boxes.
No,
It's about the human element.
exactly.
Now, let's say a startup aces due diligence.
Okay.
How do VCs determine what the startup is worth? Is there a formula?
That's where valuation comes in, and it really is a blend of art and science.
Oh, interesting.
For early stage companies, where historical data is limited, it's about potential
Okay.
and projection.
Yep.
VCs look at the market size, the team's experience, the strength of that business model.
It's like they're trying to predict the future,
They are, in a way.
which is pretty hard.
It is.
Are there any specific methods they use to get to a valuation?
There are a few common approaches,
Okay.
like the discounted cash flow method.
Uh-huh.
It tries to project future cash flows to figure out the present value.
Okay.
And then there's the scorecard method, which compares the startup to similar companies that have already been successful.
Interesting.
But honestly, a lot of early stage valuation involves a bit of educated guessing.
So it's a combination of data
Yeah.
and gut feeling.
And gut feeling.
Now, assuming both sides agree on a valuation, what's next?
Then it's time to talk terms, and this is where things get very specific.
Okay.
This covers everything from equity the VC gets for their investment
Right.
to control over the company's decisions.
Okay, let's break that down.
Yep.
What are some key investment terms that both sides need to be aware of?
One of the big ones is liquidation preference. It ensures that if the company is sold or goes public, the investors get their money back first.
Okay.
Even if the return is less than they initially hoped for,
Okay.
it's a way to mitigate risk.
So like an insurance policy
Exactly.
for the investor.
Yeah, exactly.
Okay.
What else? Then there's anti-dilution protection, which protects investors if the company raises money at a lower valuation later on.
Okay.
It makes sure their ownership stake doesn't get diluted.
It's about protecting their investment.
Yeah.
But it's not just about protecting their money, is it?
No,
They want to be involved in the startup's success.
absolutely. The best VCs bring more than just money to the table.
Right.
They provide guidance, mentorship, and access to their network.
It's about support.
It is. It's about helping you navigate the challenges of building a successful business.
So it's about finding a VC that's a good fit,
Yeah.
both financially and strategically.
Yes.
Someone who shares your vision
Absolutely.
and is willing to be a true partner.
That's the ideal scenario, a true
Sure.
partnership,
I like it.
where both sides are aligned on goals and committed to achieving them together.
Working together.
Working together, finding that right partner can really make all the difference.
Again.
For a young startup, it's not just about the money.
Right.
It's the guidance, the support along the way.
It's a journey together.
It is?
Even with the best VC, though, building a startup,
Yeah,
that's risky business.
it is.
I imagine VCs see a lot of failures.
Absolutely. Not every investment turns into a unicorn.
Right.
And VCs know that going in.
Yeah.
They know for every big win,
Yeah.
there are going to be some losses.
So spread the risk.
Exactly. They invest in a portfolio of companies,
Makes sense.
spreading that risk across different ventures.
I'm curious, what are some of the most common reasons why startups fail?
There are definitely some patterns.
Yeah.
One of the biggest is a lack of product market fit.
Meaning?
You might have an amazing product,
Okay.
but if there's no real need for it or
Uh-huh.
you can't reach those customers,
You're in trouble.
you're in trouble.
So it's not enough to just build something great.
No.
You have to solve a problem
Exactly.
for the right people.
For the right people.
Okay, what else?
Another common reason is poor financial management.
Money problems.
Money problems. Startups burn through cash quickly,
Right.
and if they don't secure more funding,
Yeah.
when they need it, they can run out of runway before they even take off.
It's a balancing act.
It is.
Spending to grow, but also conserving resources.
Yeah.
Tough.
But then you have external factors,
Okay.
things that can really derail even the most promising ventures. Economic downturns, unexpected competition,
Oh, yeah.
even a shift in market trends.
Wow.
All of that can have a big impact.
So sometimes it's not even the founder's fault.
Right. Sometimes it's just bad luck.
Unforeseen circumstances.
That's the nature of entrepreneurship.
Yeah.
It's inherently risky,
True.
but that's also what makes it exciting.
Okay, let's talk about technology and its impact on VC. It seems like digital tools and platforms are really changing the game.
They absolutely are. The internet has made it easier than ever for startups to reach a global audience,
Right.
launch products online, and scale quickly.
It's a whole new world.
It is. And that's created a ton of new investment opportunities for VCs.
It's almost leveled the playing field. Location doesn't matter as much anymore.
Exactly. And we're also seeing the rise of crowdfunding platforms,
Oh, yeah.
which allows startups to raise capital from a lot of individual investors,
Okay.
often bypassing that traditional VC route.
It's democratizing access to funding.
It really is.
That's pretty cool.
It is. And for VCs, these platforms have become really valuable tools for finding deals.
I can see that.
They can look through hundreds of startup profiles, filter by industry,
Wow.
and find companies that fit their criteria.
It's like a digital marketplace for startup investment.
That's a great way to put it.
And they're constantly evolving,
They are.
adding new features like data analytics,
Right.
investor matching algorithms
Well, they
to make the process even more efficient.
It's really interesting to see how technology is constantly reshaping the VC landscape.
It is.
Yeah.
But even with all these advancements, there are still challenges, right?
Of course, one of the biggest is competition.
Okay.
There's so much capital flowing into the VC market right now.
Oh, wow.
It's driving up valuations
Making it more competitive.
and creating a much more competitive fundraising environment.
So startups have more options, but VCs have to fight harder to get those deals.
That's exactly right. And
Okay.
it can lead to inflated valuations and
Mhm.
unrealistic expectations, which can be a concern for investors.
It's a fine line
It is.
between optimism and being cautious.
Yes.
Okay, what else?
Another challenge is the increasing complexity of the global economy.
Oh, yeah.
Geopolitical uncertainties, trade wars,
Yeah.
regulatory changes.
It's a lot.
All of that can impact a startup's growth,
Right.
making it harder for VCs to assess risk.
and make good decisions.
Exactly.
So VCs need to be more than just financial experts.
Yeah.
They need to be strategic thinkers.
They do with a global perspective.
It's a tough job.
It is, the role of the VC has really evolved.
In what way?
It's not just about providing capital anymore.
It's more hands-on.
It's about partnering with founders to build companies that can thrive in a world that's constantly changing.
Speaking of evolving roles, there's been a lot of talk about diversity and inclusion in VC.
Yeah.
What are your thoughts on that?
Diversity and inclusion are incredibly important.
Okay.
Not just ethically, but also from a business perspective.
How so?
When you have a diverse group of investors, you're more likely to see a more diverse range of startups getting funded.
So a wider range of problems being solved.
Exactly.
A broader market being served.
It's not just a feel-good initiative.
Yeah.
It's a strategic imperative for success.
Now, what about the role of government in all this?
Sure.
Are there any policies or initiatives that can help foster innovation and entrepreneurship?
Absolutely. Governments can play a key role in creating a thriving startup ecosystem.
Okay, how?
One way is by offering tax incentive
Sure.
for early-stage investors.
Making it more attractive to invest in those riskier ventures.
Exactly, making it easier for those startups to get the funding they need.
To get off the ground.
Right.
Okay.
Governments can also create funding programs to support research and development.
So like grants.
Grants, yeah, especially in new technologies.
Okay.
This can help foster groundbreaking ideas and really push innovation forward.
It's about nurturing those seeds of innovation.
It is.
Giving them the resources they need.
And governments can also streamline regulations for startups,
Makes sense.
making it easier for them to launch and grow.
Removing those obstacles.
Exactly, creating a more entrepreneur-friendly environment.
I like it.
And lastly, investing in education and training programs to develop future entrepreneurs.
So building that talent pipeline.
Precisely. We need to give future founders the skills and knowledge they need to be successful.
That's important.
It is by taking these steps, governments can really create a dynamic VC ecosystem that drives innovation and economic growth for everybody.
Let's look ahead for a moment.
Okay.
What trends or technologies do you think will shape the VC industry in the coming years?
That's a great question. One major trend is definitely artificial intelligence.
AI.
AI, it's already being used by some VCs.
Oh, really?
Yeah, to analyze data,
Okay.
identify those promising startups, and even automate some parts of the investment process.
So it's like a digital assistant
It is.
for VC.
Exactly.
Yeah.
AI can help VCs make better decisions, giving them more time to focus on those relationships with founders.
So it's not replacing VCs.
No.
It's more like enhancing their capabilities.
Precisely.
That's
We're
good.
also seeing a growing interest in impact investing,
Okay.
where investors are looking for companies that are not only profitable, but also making a positive impact on the world.
I like that.
So they're looking for financial returns, but also social and environmental responsibility.
Aligning profit with purpose.
Exactly. It's a powerful combination.
It is.
And I think we'll continue to see a blurring of the lines between VC and other types of investments.
Meaning.
Traditionally, VC has been separate from private equity hedge funds, public markets.
Right.
But now we're seeing more crossover investors who are comfortable putting money in multiple asset classes.
So it's becoming more fluid.
It is.
Interconnected.
Exactly. And this creates a lot of new opportunities for both startups and investors.
How so?
Startups can access a larger pool of capital.
Right.
And investors have more ways to diversify their portfolios.
It sounds like the VC world is in for some big changes.
It is.
Before we wrap up, is there anything else you want to share with our listeners?
I think the big takeaway here is that venture capital, it's about believing in the future.
Yeah.
It's about supporting those entrepreneurs, those bold ones, you know.
The risk takers.
The risk takers shaping the world of tomorrow. It's a mix of financial smarts and a deep belief in human ingenuity.
It's inspiring to think about the impact, not just on the companies, but the world as a whole.
Absolutely. Venture capital is critical for driving innovation,
Creating jobs.
and solving those big problems.
The ones that really matter.
The ones that really matter.
We've covered a lot today.
We have.
Due diligence,
Yeah.
the role of technology, the importance of diversity. But before we wrap up,
Yeah.
tell me a bit about your journey.
Okay.
What drew you to the world of venture capital?
You know, I've always been drawn to people who dream big,
Yeah.
people who see potential,
Yeah.
not just the world as it is, but as it could be.
I like that.
And venture capital, for me, that's the perfect way to support those dreamers,
Yeah.
the innovators pushing boundaries.
It's about more than just making money.
It is.
It's about making a difference.
Exactly. It's about investing in those ideas, the
Right.
ones with the power to change the world, you know?
To improve lives.
To improve lives, to create a brighter future, and that's incredibly rewarding.
It's a powerful motivator.
It is.
I think that's what makes VC so unique.
Yeah.
It's a blend of business and this desire for positive impact.
Absolutely.
So as we close out this deep dive,
Uh-huh.
what's one piece of advice
Right.
you'd give to someone entering the world of venture capital?
I would say be curious, be open-minded,
Okay.
and always be ready to learn.
The learning never stops,
It really doesn't.
especially in that world.
Especially in VC, it's always evolving, so you have to adapt,
Right.
embrace new ideas, but most importantly,
Yeah.
follow your passion.
Find what excites you.
Exactly. Find those areas that really get you going and put your energy there.
That's fantastic advice.
Thank you.
Find your passion and let it fuel your journey.
I love that.
Well, there you have it, folks. A glimpse into the exciting world of venture capital.
It is exciting.
We hope you enjoyed this deep dive
I did.
as much as we did.
Me too.
Until next time, keep those entrepreneurial spirits burning bright.
Yes, absolutely.